All right. Good morning, afternoon, evening, wherever you're from. Today it's here in Alaska. It's Saturday, August 22nd. Want to just do a short video. I've identified and resolved two bugs within the uh, automation that I've been working on. The latest version is NR7 V1, and it's based on kind of a narrow range breakout theory that it dates really decades, but it proven to be really effective, especially with gold. So the objective of this video is to kind of show, hey, we've got four different ways to run this automation within the one strategy. So going forward, you won't hear me say NR7 V1. I'll refer to it as ANA. And ANA is just an acronym that stands for Automated Ninja Algorithm. So when I say ANA, I'm actually talking about the bot. I'm talking about the automation, the strategy, what have you. So ANA is the name that I'm kind of utilizing for any of the automation that I'm building or working on. This one here will probably final version when it's no longer beta will probably be called Anabo. It'd be Ana dash breakout because really that's the strategy is we're having a predetermined number of candles that are optimized, and Ana will look back over seven candles, four candles, five candles, whatever the optimization settings are, and it will break out of that what we call like a range of those seven candles, and that's kind of where the narrow range premise comes from. But it's really a breakout, of that range. So when it's all said and done, the end state I'm working towards is ANABO, which stands for Automated Ninja Algorithm Breakout. So that's kind of where we're going. But the piece that I want to share with you all right now, I'll start with real live results um, to kind of make your mouth water a little bit. I'm very excited about some of the short-term results we've seen. And of course, it's still beta. We got a long ways to go to validate anything. Um, but I'll show you some results from the past week with the last two updates or bugs that I've been able to fix and utilizing gold um, primarily because the optimization results are favorable, even over MNQ. But the main reason is it frees up to trade MNQ. For those that actually prefer MNQ, even during Globex, let alone during the New York session, this kind of frees that up. So it gives you an additional opportunity to make some funds while trading without it having any impact on your current training model if you trade MNQ, MES, or gold. In addition, I got Anthony kind of on my mind when I think about, hey, gold, the New York session for gold, even though it's just really kind of based on a pit time, but it really starts at at 4:20 Alaska time or 8:20 Eastern Standard Time, and then runs until the CME exchange closes. So it's got a little shift to the left for its actual prime time for it to really start. So I optimize really starting at 4:20 here in Alaska for that one there. The reason I share that is um, utilizing gold and focusing on that day session kind of frees up to trade MNQ, during that London exchange or, pre-market or Globex as a whole. So a real separation of priorities is at play here, which really to me, I think just provides increased opportunity for more folks interested in actually utilizing some automation or wanting to still participate in this beta test. So that's where we are today. Real quick, I'll just kind of show up results that I have here. the trade performance that you're seeing here, this is utilizing the native from your control center within NinjaTrader. Under new, basically, I just clicked on trade performance, and that's what brings up this window. And you've got this filter here. You want to click on that, and then it allows you, it'll show all your account numbers, different accounts. You can select multiple accounts or individual accounts to kind of look at the trade performance. And this is pretty cool because it does um, agree byte for byte with the trade performance that we're used to seeing within the Trade-Avate. So kind of a shout out to Julie Bean for kind of reminding me that this did exist within NinjaTrader because I actually had forgotten about it or never did really utilize it because of Trade-Avate. Um, the reason it's important versus Trade-Avate is especially with beta testing or if you're running in a sim accounts, you can actually utilize the native NinjaTrader 8 performance trade performance tool to see how you're actually doing on a sim account. Or in Trade-Avate, you can only see trade performance on your actual, accounts that have that are in evaluation or like a funded status. So that's the reason this is actually important. But I like to see how it does compare byte for byte. If you look at this 375482, it's basically from one Saturday to the next. So this just captures this past week. And real quick, I'll show you the actual performance that I've got going. So here's a download from so actually I guess it does look a little bit different. So here's the total performance 38, 56, 50, and the reason and it's a good catch. I had one mishap um, when I was running Anna here. So you got 37, 54 um, with the trade performance from Ninja. We got like 38, 56, and I just within this complete trade performance, I had one issue error, human error induced, where I actually was entering a trade on MES on a different account, and I still had this account selected. So there's like one small trade in there of MES, and that's the only reason the numbers are actually different. But the biggest thing we're looking at here is hey, what is the net profit with gold, 38.56, 37.54. So this is pulled straight from Trade-Avate. So this is going to be what your prop firm is going to be tracking. We got total drawdown, max drawdown 661.36. And here we've got um, max drawdown 664.06. So that's, so we're off by that, just roughly, $3 here is the only difference. But it's comparing apples to apples. So a human error induced the slight variation, but this is really good data for your live accounts, let alone any automation that you're tracking. This comes right into native right from the control center from NinjaTrader, or you got your Trade-Avate. Trade-Avate for live simulation or funded. NinjaTrader for all your live funded, but to include your sim. That's the big difference. That's the highlight. So I'll put that away, but I kind of wanted to show you the results from gold running in an actual Apex legacy account starting last Sunday night, running through Friday's close of business. 2 micros of gold. So excellent results for the week. So total number of trades 42, 54% profitable, 19 losing trades, 23 winning trades. Average trade was a positive $89.40. So the average winner at 251, more than double the average loser of 106, which then gives us that ratio of average win to average loss, which in a sense is equivalent to your overall R to R. Reward to risk is 2.36. So the different two different settings that we actually ran that we optimized. We'll cover that, and I'll go over that in the optimizer. But that's the work involved is investing, spending some time to optimize, and then let them run. And it may not be the exact same settings, the exact same um, approach to trading. Some of this includes allowing runners to run with a trailing stop, and another setting is, hey, it's just a true locked take profit with a locked stop loss, and let the trade play out. So different ways to actually set up Anna, and that's going to be based on your preference and really should be driven by how you optimize. Okay, Matt, consecutive winners, 8, consecutive losers, 3. Largest winning 697, largest losing 466. And another thing I really like is average number of trades per day. We're active, so it's not a matter of just sitting there multiple days in a row and not getting a fill, which it was fairly common with the EMA follower that I've been working. It's just not active enough to produce the type of consistent, hey, really just a monthly positive net flow is really the goal of some automation, because then it would stand on its own, separate from our manual trading. And if we can have some automation that consistently provides a positive net income month in and month out, then we have an additional stream of income and joy. I mean, it adds to our business model. So that's the opportunity. You look at the profit per month, that is something I really do look at, but mainly as uh, motivation more than anything, because this is the profit per month based on, how many, uh, the full range that this is optimized for. So I range by default. Basically, I capture the last 90 days. Let me kind of And what I mean by that is really this time frame. You know, I will always come in and basically shift. Like before we even optimize the day, I would come in and I'm gonna be looking at May, and I'll capture like May 23rd, and I want to set everything up to where August 22nd. So I'm at the end of the most recent week and going back approximately 3 months. I can't sit here and say, hey, 90 days, 120, hey, 6 months, go back to January. I'm looking just to standardize, hey, if I apply the same framework week in and week out, with the way the market likes to change, does that work? Is there some consistency by just following a checklist of how I want to optimize, what my time frame is going to be, and other parameters? So this is the model that I used for this past week. Everything was based on 90 days prior. Um, and there's one other reason I like the 90 days. I can't say it's directly impacting our historical data that we're optimizing against. However, live tick data is a rolling 90-day period within TradingView, within NinjaTrader, excuse me. So, and where that really has a bearing is in market replay. So if you go into market replay, you cannot even download market replay data beyond 90 days. And that does seem to shift every day. Go in, it's one less day of market replay data. So that's another reason where I'm like, hey, I know I've got uh, current live tick data feeding the downloads that is current, and it's only going to go back about 90 days. So I just stick to that 90 days. And if that model works to optimize on 90 days, and we don't have to guess 120 days, 6 months is better. If 90 days provides us what we need for the current behavior of whatever the market's doing, and we can optimize with some decent results, and our live does kind of follow suit. That's the model that I'm trying to drill down on. So I, by default, will update every weekend. At the end of a trading week, I'll just shift my start date to the right 1 week, and I'll shift my end date to the right 1 week and continue optimizing for the following week. Okay. So first thing I want to do to optimize is I want to basically bring up the strategy. So Annabo, future name, is currently called NR7V1. So I want to make sure that I go ahead and select optimize and the right strategy is selected. And then I have a template that I've already built. And once you do this once, it's going to make things a lot easier. But bottom right here, I click template and I basically have an initialize for day. So it's a template that I can just click on and load. Once that's loaded, I don't have to go and change all these different settings every time I want to like optimize a different day. So what it has in for me already is it's got my default contract size, which I've adjusted to 2 instead of 1 micro. My default direction is always both. And then for this particular setting, and this is going to be new to everybody that's not worked with NR7 in the last couple of weeks, is we've got a pivot, look back, and a fixed tick. These two always go together. Okay, and this is the basis for 2 of the 4 different type of setups that we can utilize within NR7. But you must understand when pivot look back is selected for a stop mode, target mode must always be fixed ticks. Okay, what the stop mode pivot look back does, that's where it's actually looking back based on this NR7 look back, and it's going to put that stop at a pivot point. So it's not going to be a fixed stop based on, just optimizing, because those stops can just be like in the middle of you know, halfway up to a recent valid pivot point. So the pivot look back gives us stops at actual pivot points based on that range that it's looking back at. And then the fixed ticks, we're able to optimize the targets separate from the actual initial stop. And so it does give us a different and a varying reward to risk on every potential trade, but we're optimizing specifically based on the range size itself, on what it's looking back, and then we're optimizing, the follow through towards an actual target. So we're going to optimize the fixed ticks with and at the same time as the pivot look back, but it's not a consistent reward to risk ratio. It will vary from trade to trade. The other stop mode is NR7 range. Must understand NR7 range is always paired with the risk reward. So do not have fixed ticks or pivot look back when you have NR7 range. And what this does, NR7 range, then when we come into optimize, we're going to focus on this risk reward. This is going to be the field that we're that we're going to be optimizing, and this is your stop loss. This is your risk and your reward wrapped up into a single ratio. So when NR7 range is selected, target mode is your risk reward. And that takes care of your take profit and your stop loss. So 2.6 by default, that means, hey, my reward is always 2.6 of my risk. Note also, okay, NR7 range, risk reward, and then the risk reward ratio and stop buffer. These 4 always go together. So risk reward, stop buffer. That is basically your stop loss and your take profit when NR7 range and risk reward. Okay, let's go back to stop mode pivot and just kind of summarize that again. So pivot look back is always paired with fixed ticks. Non-negotiable. That is the strategy. So pivot look back fixed ticks. Now risk reward is ignored whenever you're optimizing a pivot look back fixed ticks. So just to save resources, make sure you're not, 2.6, to 3.6 with that step in there, meaning you don't want like a 1.6 and have this at like 0.2, even with pivot look back and pivot fixed ticks. This is ignored in your data, but you're going to utilize resources that actually still run through all these different increments within this range. So whenever you have your stop mode pivot look back, target mode fixed ticks, your risk reward is ignored. It's not even part of the strategy. So just make sure that you've got it set to where it will not add one additional combination when it's optimizing. It will just ignore it altogether. Okay. The same approach applies for if you've got NR7 range, your profit target ticks here is completely ignored along with your stop loss look back. It's ignored. Okay. When you have the stop mode NR7 range. But because we are pivot look back and because our target mode is fixed ticks, we are optimizing the stop loss look back, which is our stop mode optimization. Stop loss look back goes with the pivot look back. The profit target ticks is a standalone metric that we're going to optimize that is directly tied to your target mode fixed ticks. So pivot look back paired with fixed ticks, and then from an optimizable parameter, excuse me, profit target ticks and your stop loss look back. That is paramount to understand. Okay, so pivot look back, stop mode, then your stop loss look back. They go together. Fixed ticks is your target mode. Your profit target ticks. That's what you're optimizing under the target mode fixed ticks. Okay. The DNA or the heart of NR7 look back is this field is common to both. So you're always going to be optimizing the actual NR7 look back field. By default, I always use like a 4 to 8 to start with. Okay, so this first iteration, we've locked in our pivot look back fixed ticks, which means we're going to be optimizing stop loss, look back, and the profit target ticks. Okay, so those are open. Some other things that I want to just set in as my default before I run my first broad sweep is exit method is false initially. Okay. Again, when this is false, that means none of these fields are part of your actual results. So we don't want any steps in there to add anything to our total number of combinations we're going to run. So use break even, then ride. This is a different strategy. Still within the framework of NR7, but we will want to find out if it does pay to go ahead and, hey, I don't want to hit an actual fixed profit target. I want to go ahead and just have I want a runner. I want it to just go, and it's going to be the trail multiplier, a trailing stop that'll actually close out the trade. There are some times where that actually optimizes a lot better than actually having a fixed target with a fixed stop. So, but initially, when I start optimizing, I will make sure this is false. Next thing I'm going to do is I'm going to select my instrument. And again, we're utilizing gold with the expiration of December currently. And then under data series, I'm going to make sure that optimized data series must be checked here first. And then I'm just putting in a range. I'm focusing really on that 3 to like 9 is what I'm really looking for, but I kind of want to do a broad sweep initially just to kind of say, hey, is there what's optimal, from some of those larger time frames like 15 minutes and greater. But my increment 2 just allows me to go to look at 3, it'll look at 5, 7, 9. It'll increment by 2 all the way up to 25. And so it'll look at all those different time frames along with these different profit targets at the same time. So data series is selected. I've got my instrument, then my time frame. So again, 523 to 822, that is correct as far as, hey, this week's goal to really optimize for the next week is I'm going to use like the most recent last 3 months essentially. Okay, I do utilize include commission. That's basically $1.90 for trade because that just adds a little more reality to your total summary numbers when you're optimizing. So that's default. I utilize the free NinjaTrader brokerage free, and it just does generate $1.90, I think, per trade, which adds, regardless of your prop firm, regardless of the fees, at least it's adding something in there to give us a little closer to reality. From a historical field processing, I will leave standard fastest for optimization. We will change that once we lock in to something that perceived to be pretty strong. We'll lock that and we'll change that. I'll come back to that here in a moment. Excuse me. I've also added a default slippage of 1 because from live versus back test, especially with gold, we are 0.1, sometimes 0.2 variance on any of the market type orders, real world. So I'm optimizing with some slippage because it is pretty cool. I can look at live what did happen. I can pull up the charts in a back test on the same day, and our strategy now is executing as intended, and we have a little slippage, but it just depends on the volatility. And it's almost tick for tick, just really good data in our back tests, even after we're done with live and just kind of seeing how everything is executing exactly as intended. So slippage, default 1, include commission, make sure that's true with the Ninja brokerage free. And then best results. I always go to 1,000. I want to keep it at 1,000. That allows me to kind of sort through and at least get the top few. Many times I don't even have a total of 1,000 results that I'm looking at, but 1,000 is my default. Keep this at max profit factor for now, and I'll run this exercise through. But I've got a couple homemade optimizers that I utilize, and I can't say that it really is a major difference with optimizing. However, what I end up settling for my results are different than some other people's, and so I need to find out if what I optimize on is the reason for that. So, but by default within Ninja, you have the max profit factor. We're going to just keep that as a default for this exercise, and we should drill down to some decent results regardless. And I will, in an additional course, or if I got time at the end here, I'll show you what the Calmore ratio does. And another one I'm working on is this expectancy. So expectancy in Calmore, because that kind of gives us a bottom line. Hey, I want my max drawdown part of the displayed results that I'm choosing from. So that's the reason for that. But let's keep this a max prof factor because everybody watching this video has this native in the NinjaTrader platform. So we're going to utilize the native max profit factor. Okay. Entry per direction, leave that as 1. Exit on session close, very good if we're running a day session. Hey, that is just a catch-all, even though your prop firm may close you 15 minutes before session close, maybe 1 minute before session close, but I just default that as an additional means to make sure I'm closed out of the trade. The other break end of day, make sure this is always selected. This does affect data when end of day is not selected. End of day has nothing to do with a midnight changing from one calendar day to another. It has nothing to do with the session close. Break at end of day is purely from a printing candle perspective is probably the best way to say it. So a five, let's say a 7-minute candle, which is not always going to close at the top of the hour. Okay. If you do not have break at end of day selected, well, that 7-minute candle will kind of continue to build when the CME does open the very first few minutes of the next session. It'll kind of there'll be some continuity from the end of a CME session into the next one. So break at end of day says, hey, I don't want no carryover. I don't want any bleed over. I want a 7-minute candle to start at 0 at the start of the next session. I don't want a 7-minute candle to actually just continue from like 3 minutes or 4 minutes. Excuse me, I got a bug in my throat. So break at end of day is critical to make sure that that is always selected. And again, that's just a means to have consistency in your results. So I've kind of got my defaults all plugged in. 1,000 results, commission, break at end of day, my time frame. I'm optimizing against the just the candle size, profit targets. Again, initial run on NR7 under a stop mode of pivot look back and fixed ticks. Okay. And gold starts at 4:20 on the day session in Alaska, 8:20 Eastern Standard Time. The CME session closes, at 1300. So I am having a stop time. I don't want any new trades to even initiate after 12:30. And then at 12:45, I want to go ahead and make sure a flatten command is sent, and I want things to actually flatten before 1300. NR7, 4 to 8. Risk reward. I'm not using risk to reward when I've got pivot look back selected. So that is being ignored. So is my stop buffer. But because pivot look back is selected along with fixed ticks, I am now optimizing the stop loss look back and profit target ticks. So a hasty first broad sweep, I will just kind of set, hey, 1 to 10. But I'm only going to look at increments of like 3 ticks in this initial broad sweep. For my profit target, I'm just starting at 100 and I'm going to sweep all the way to 240. But I'm just going to look at 20 tick intervals. So I'm not going to sit here all day and optimize every single combination. So I'm just going to have some broad increments to give me an idea. Hey, do I have something that's potential here that's going to work? Then my initial one, break even, is false. I've got gold and then I've got my time. So our next thing here, we're ready to hit run. And it takes just a moment to kind of initialize the first iteration. However, once it starts, it does go pretty fast. So I won't even pause the video. We're going to go ahead and let this run in the background. If you're watching this recorded, this is where you can kind of, hey, skip forward 10, 20, 30 seconds or whatever until you see that ratio up to 1920 get to a close. And then we'll kind of hastily look at our data and then see what our next step's going to be. But that's another thing about, or nice thing about the NR7, this version I've got here, is we can actually optimize relatively quick. And we're not spending all our evenings or weekends just to try to optimize to come up with some settings that we think are going to work for the following week. So it does happen relatively quick. So you can see right now we've only been going a little over a minute, and we're well over halfway done. Okay, she's about ready to wrap up here, less than 100. And here's our first results. So what are we actually looking at here? I'm going to go ahead and scroll this down a little bit. One of the first things I'm looking at is well, there's a few things. Obviously, this performance factor is the max profit factor. So it's kind of optimizing on that. But our total net profit is something we're really interested in. Correlated directly with what is the max drawdown. But I also want to say, hey, is this very active? If this is only like 10, 11 trades, not interested. But if I'm looking at that higher volume of trades, So again, keep in mind, um, and I forgot to even, this is actually Friday. So I did not select the day that I really want to target here. But keep in mind, this is only Fridays from 420 to the day session of gold, 420 in the morning until the close markets, only Fridays for the last 3 months. So just a hasty glance says, hey, we got around 3,200 with a 216 drawdown, 29 trades. Hey, percent profitable 75% of the time. So our, kind of risk to reward, hey, we win $1.52 to every $1 we risk. Average winning trade is 184, average losing trade is 121. So immediately we recognize we got something to work with. But I want to go ahead and I forgot to really follow my checklist and I forgot to select the day that I'm optimizing. So I'm going to rerun this one because it is pretty quick. But I wanted to focus on Mondays. It's a weekend now. I want to kind of start with Monday during the day. So Friday false, Monday true. Everything else is the same. We're going to have still 1920 we've got to hit, but I really want to focus on Monday because even though I'm doing a video here, this is a valid optimization that I'm running, and this will determine what I'm going to run this next Monday. So again, I just had to make a correction to get the right day, and then we'll go from here. Again, it's going to take a couple minutes. So this is where you can just kind of fast forward on the video, but I'm just going to keep everything going for the sake of continuity, and it makes it easier for me to actually record. I need to get a little background app where I could mute myself, but then put on some awesome elevator music going in the background and have that music stop when I'm ready to talk again. But I'm not there yet. But just pretend there's elevator music in the background while this is optimizing. Okay, so now we're looking at Monday only. So our performance is looking pretty strong. Drawdown is looking very good because we want low number here. Hey, we've got a minimum of looks like 20 trades, 15 plus 20 trades. Percent profitable is looking really good. So what I'm going to look at first is I kind of want to look at my total net profit. By default, descending order for this performance factor. That's how things are populating. So, which tells us we should have our best results already populating at the top. But total net profit, I want to go ahead and select on that. So there's your worst. There's a higher one in there. And then that third click basically brings this back to descending order. One click, is the worst profit down to best is hidden right here. Then that third click, and you can see how the performance is not in order over here. And then that third click right there, hey, that performance is not in true ascending order, but our net profit is. And that allows to see us, hey, does our higher profits provide us some good performance? And is our drawdown within an acceptable range. So that sorting by net profit, keeping in mind, hey, I still need to make sure these performance results are strong, and I need to make sure my max drawdown doesn't just go crazy on me. So, and that's where we can kind of start looking at a balance between, hey, this 72% profitable is very good. 81 is actually a lot better. 25 trades versus 21. So number of trades is actually strong on both. Profit factor is a little better, with less trades and less, but you're looking at $900 difference on less of your total net profit. So this is where I would kind of default to our higher net profit because because of a entire $900 greater net profit, I'm only giving up basically 170 of max drawdown. I still have a 72% profitable rate, even though my drawdown is up, but a $900 increase on profit with only around roughly $170 more increase. So that variation to me is it's easy to select the larger drawdown, the smaller percent profitable because the total net profit is substantially higher. And this overall performance factor of 2.91 is actually pretty high. Our ratio average winner to loser is still 1.42. Average winning trade 233, average losing 163. And again, that's 72% profitable. So this is a really strong number. We're up at over 3,000 total net profit. And this is, again, just a hasty. So when you get this on your initial broad sweep, you can assume these numbers are actually going to improve because now we're only going to be fine tuning. Let's look at a couple others. We got some 29, 28, 27s. What's the main difference here? Okay, our performance factor goes down a little bit. But here you got a 394 drawdown. Everything else is a little bit higher. Here's a 26, 394. So pretty much looks like we got some very similar settings. And it's probably going to be like your TP or stop's going to be a variance. But hands down, this becomes where I want to start. What I don't like about Monday is I don't like the 21 minute candle. I really like the 5 to 7 that we're looking at. So I want to look a little bit different. So I've got some 9s in here, a little bit smaller, 55% rate. So that data doesn't equate. But we really don't have too many small ones for a Monday day session. So what we're going to do is not completely locked in, saying I want to drill down on this, even though from a broad perspective, this is good numbers. This is what we're after. But I don't like the fact that it's 21 minutes. When we start looking at a pivot look back, for a stop, and it's really becomes these stop loss look back bars where, here by default, it's looking at 4 21-minute candles. So if you're on a big volatile move, well, if you've got 2 21-minute candles back to back, and then you get triggered in that same direction, well, you're looking at a very, very large stop relative to your optimized TP. So I do generally favor the smaller time frames. So what the next step is I'm going to go ahead and lock in just as a basis to remember where this comes from. I am going to go ahead and put in 160 for my take profit because I don't want to utilize the take profit on this next broad sweep. I am going to be looking at the use break even and just do kind of a hasty comparison. So I don't want to have the profit target ticks considered anymore in this next version of the strategy. But I'm going to go ahead and just lock in the settings that did give me something acceptable when I have my break even set to false. So what that's going to do for me now is I'm still going to leave my NR7 4 to 8, but I am not looking at a stop loss look back, and I'm not looking at profit targets. I am now going to go to true for my use break even. Okay, and now I'm going to stick with the default, my trail trigger multiple of 2, ATR period of 14. Those are just kind of industry standards. They work fine for what we're after, but what we need to optimize is going to be this ATR trail multiplier. This is going to give us a different strategy altogether within the kind of a narrow range construct, but this is just a runner only. The only reason you're going to get stopped out of a trade is either you hit that initial stop loss, or it's going to continue run and it'll be a trailing stop. So my initial analysis on this, I like to start a little bit below 1, and then I like to go all the way up to 3. But my steps are going to be at like 0.2. So I'm looking at every potential trailing stop size with a break even and then ride. And so once you get like your trail will get triggered once you kind of hit this ATR period, plus the multiplier, then your initial stop will go to break even. So then you have zero risk once your trail stop kicks in. But let's do a hasty look again. We're going to keep the data series identical. And we just want to compare apples to apples on utilizing a runner or utilizing a fixed TP. So we didn't really change any of the other parameters. You can see we only got about a less than a third, or just a little bit more than a third of combinations to look at. So it's a very fast way to look at the second way to run NR7. And this just allows me early in my optimization to rule out or identify if there's an edge with the runner approach or the locked take profit. Okay. Okay, so this right here tells us we're kind of locked in. Hasty look, total net profit looks like around 2,500. And again, interesting that it kind of did key in on the 21 minutes. So that kind of validates for Monday's day that, hey, we're looking at around a 21-minute candle based on Monday's behavior, the past 90 days. So that's another confluence that, hey, we might be well within the correct candle size for this particular optimization session that we're working on. And that 2,500 is a little bit less than 3,000. We've got a $341 drawdown, so drawdown is pretty similar. Our trade count is down a little bit. I think we were up around that 20 plus, and percent profitable is still strong, but we're not hitting that 70. So what we can just hastily eliminate from our optimization plan right here is we're not going to utilize the break even than true exit method. We're going to go ahead and go back to our faults. So now one of 4 possible means to run NR7 has been eliminated. So we're no longer even going to consider optimizing the use break even approach. We're going to focus on fixed take profit, fixed stop loss. So now I'm going to go back to this ATR multiplier. I don't want these to ever be run again to slow down my optimization. So I'm going to put these back at just the defaults. I think I had them at 2.2. The most important thing is set it up to where it's not going to utilize any system resources. And with faults being set, this is no longer at all part of your strategy. So that brings us back here. Now we've got additional information. We've seen 2 iterations. Let's keep this the same because I want to show you the other 2 approaches. So profit target and stop loss, they're no longer going to be considered because they're locked in at fixed points. But let's go back up here and now change our stop mode and target mode. So we're going to go to the NR7 range, uncheck the pivot lock. Target mode, we're going to go to risk reward, uncheck the fixed. Now keep in mind, when we have our stop mode is NR7 and target mode is risk reward, and these two always go together, then our risk reward is what we want to optimize, and our stop buffer. These two go with the risk reward. So now I'm going to hit this, say at 1. Let's go like 1 to 3, and I'll just do point 4, a hasty broad look. Stop buffer, I'll do the same thing. I'll go like maybe 1 to 10, but I'll look at maybe every other bar. And along with my NR7 look back, that's the only thing I'm looking at to optimize and say, hey, does having a fixed risk reward versus a look back produce some better overall results on our broad sweeps? So let's run this one here. So again, we got about 1,800 iterations. Time frame, it's going to go about as fast as our 1920. We're still just trying to decide, hey, which of the 4 different ways to use NR7 do we like? Predominantly, the pivot look back with the fixed target is better than utilizing the NR7 range, but I'm not done testing that. And I won't be for a few more weeks because there could be different instruments where the risk reward works far better. So it's important to keep it as an available tool because we got one strategy that we could execute different instruments with kind of different approaches. So I have not deemed it unnecessary at all yet. But with gold, the last couple weeks, the fixed the look back feature has been ideal, along with some use the break even than true exit method. That has had a couple sessions where that is the optimal setting. Okay, and what I like about this is we can quickly scroll through, make sure everything's sorted in the order we want. We've got our total net profits stacked at the top. Here's our performance ranking. Hey, a good number of trades. That's very positive. Percent profitable. Hey, we got a couple that are over 50%. Some that are not. The drawdown is quite a bit larger as a whole. Our smallest drawdown here at 574 or even 491, but look at our total net profit. It does not compete with that 3,000 net profit. So right here, I now confidently eliminate the NR7 range with the risk reward from this Monday optimization. Because of the fixed stop mode NR7 range and target mode risk reward, with these type of numbers, I'm not even going to waste time to see if use a break even then true feature works on this one here. Most likely, this is the only information we need. Let's go ahead and do it just for this exercise to confirm that our theory is right. But what we're basically able to decide right now is like, hey, I'm going to go back to my look back feature. I'm going to fine tune that optimization and go from there. So to do that, our risk reward is going to be locked in. So we'll just utilize the default that it's got here. Well, let's actually select this other one, which is a little bit better. So all I'm doing now is locking in my risk reward at 1.4 so that it doesn't become any combination that it's looked at. Because now that I'm going to switch this to break even, then true, my risk reward for a take profit is no longer being evaluated. It's no longer part of the strategy. It's only going to be the trailing stop. So let's lock these in at 3. And now keep in mind, the only thing I'm looking for my take profit and my stop loss is a break even first. Once I hit an ATR multiplier, once that's triggered, then I'm at break even, and then it could run. And then it's a trailing stop is actually how you'll get out of the trade. So I'll still run my same defaults, 0.8 to 3, run this at like 0.2. The risk reward is locked in, so is the stop buffer, because all I want to see, and I need to make sure that this is true, I want to see if a runner utilizing the NR7 range can beat these results. Okay, interesting. Um, but not necessarily in an extremely positive way. Um, what I do like, see here, here's our getting all my total net profits kind of pushed up to the top. My performance here ascends from the best, not necessarily in perfect order, because the net profit actually is how things are ordered. But our total net profit actually is larger than of the 4 different configurations that we use for NR7. So that is kind of interesting. This is again the one I like. Net profit at 3,000, max drawdown 382. Look at the total number of trades. Here's the problem: is it's only 26.47% profitable. Um, but you got to keep in mind, this is break even once your trailing mechanism is triggered. It'll automatically go to a break even. So a break even is not going to increase your profitable numbers. So then we have to come back down and kind of look a little bit closer. Let's look at, okay, total number of trades 34. I like the number of trades. We're only 26% profitable. We got 9 winning trades, but look at these 25 losing trades. A lot of slippage, but average trade of $91. Average winning trade 496, with the average losing trade 54.96. So your ratio of winning to average win to average loss is actually 9-1. Um, so this one is interesting to look at. I would not rule this out based on that percent profitable, because let's look at a chart. This will probably paint a little bit better picture what we got here. So we got to go to just Mondays. So here's an example of a good winner. Um, Flat and long, that means it's time in session, but hey, we got triggered in, and basically we just got a trailing stop, and this thing would have kept going, but we have a flat and long because of the session must be ending. In other words, this is getting 1 p.m. Alaska time, or we're getting at that. Oh, I'm sorry, yeah, 1 o'clock. or 5 p.m. Eastern Standard Time. So it triggered in and it just ran all day long. So your winners are big and your losers are small. Um, and here's where it gets kind of cool. You look at the we are long stop loss, short stop loss, but we entered long at 78.7 and price ended up going up, but we didn't get our trail didn't get triggered in time. So we took a 78.7, 78.6. So you're looking at that commission plus a tenth of a point. So that's why that loss is so small. Here you're looking at 61.6. So about two and a half, that's 9, 60, 61. So less than three ticks, loss on this one here. You can see from this blue arrow to pink area. So we got a really small, pretty much a break even right there. So within this candle, you can tell that, hey, it took off. It kind of came up. Um, no, that was a short. That was a short. So we went short here, but she ended up kind of just coming right back up and just stopped us out really quick. So again, very little risk in the runner under the narrow 7 range setup. Very little risk, but you're not winning near as much. Now let's look at our trades and kind of validate what it is we're looking at. So here's trades on this particular row's data. And again, you can kind of look at in the sequence that they come. Okay, so you're negative 64, negative 64.56, but up 473, 680, 680, up 847. So it is definitely a um, valid configuration. You're 26% profitable. If you got a designated account to run on that, this one here is our best number so far. That max drawdown is actually very good. We're allowing trend to kind of provide the overall net profit in this one here. I like the number of trades. The again, we got to look at, do we have any substantial large losses? We do not. But yet we look at the flat and long. It just ran until the session closed. If we look at the exit time, 12:57 p.m., 12:57 p.m. That's another thing we look at. You can sort by exit name. So that's another thing. Your flatten means, hey, if over here, see, I've got this flatten time. If you look over here to the top right, flatten time 12:45. And again, this is on a 9-minute candle. So that it could be carrying over like 9 more minutes past the flatten time because the candle that closes around 12:45, it's going to be, hey, true that flatten time or is it still false? If it's true, it's going to be the closing of that next 9-minute candle. So that's where 12:45 is not a hard stop. It could be up to 9 minutes later, just depending on at what part of this candle um, did it close on. So that's one reason I've got 12:45. And again, basing this kind of like on Apex, we're good up until 12:59. So as long as I don't have any flattened longs beyond 12:59, then I know, hey, everything is executing exactly as intended. I've got all my flattens 2 minutes before Apex is going to go in there and flatten it out. So there is a little logic reasoning between like a 12:45 stop time. That is something that needs to be optimized depending on candle size that you settle on. Okay, 45. Again, we're seeing evidence here that 57 is the cushion we need for that extra 9-minute candle to close once that flattened time gate becomes true within the code. So this is very positive. This means, hey, things are executing as planned. Um, so I actually am surprised that we, on our fourth, so that makes this actually video that much more valuable because you're seeing now NR7 range with risk reward. We locked in our risk reward and our stop buffer because we wanted to just take a peek and say, hey, does a break even and let it run approach on a Monday session, does it compare with the other three configurations? This one is our top choice of the four. So keep in mind, you've got the first one with the look back. So four different configurations that we have to rule out. Stop mode, with the pivot look back and fixed ticks without and false on the use break even. That's one. Number two is break even true with the fixed, with the pivot look back and the fixed ticks. Number three is our NR7 range with risk reward and false on the use break even. Number four is, again, NR7 range with risk reward, but our break even then ride true. Okay, so our fourth completely unique way to configure NR7 does provide us the best initial hasty data that we haven't even refined yet. So for this exercise and for what I'm going to do on Monday is I'm actually going to work the NR7 range, and I'm going to go ahead and let it ride, which kind of makes sense. Mondays are a little unpredictable. We don't know what happens over the weekend with news. Sunday night Globex has a large bearing, but historically, the past 90 days, we're finding out here that, hey, Monday kind of likes a break even and let it ride type approach on Mondays. It's unique to Mondays, is all we can assess right now over the last 90 days. So this becomes our, no kidding, this is what we're gonna, in this video, we're gonna go ahead and fine tune, optimize NR7 utilizing the range with risk reward, and we're going to make sure our break even is set to true. That's where we are in this video. We went through all four different configurations. The fourth one, to my surprise, actually did give us the best baseline to fine tune. So this is where if this was live, I would pause and ask for any questions, but this is pre-recorded, so I'm just going to drive on. Okay, so let's kind of clean up our settings over here. We know we're still in the optimization mode. Both is something we want to kind of look at. So now direction. Now that we've identified which of the four configurations we want to use, we kind of now want to start looking at direction. Okay, the first thing we can look at under of summary is scroll the top. So of long trades, max drawdown of 350, of short trades 457. Net profit. So this is a very balanced thing to look at right here. So, and I always prefer the both over any one particular direction. There just are some rare cases where, hey, a short only or a long only just historically is much better on this particular session. However, this is a very balanced short and long trade mix up. What you can do, especially where we can optimize fast, is let's run one more because maybe we only had 720 iterations. So this is going to be a total of around 2,160 iterations, but we can keep all our defaults the same with the exception of we can go up in here in direction and kind of just validate our theory. So we can just select long only, short only. Let's do lock in 9 minutes. Gives us less combinations to run through. Let's lock in for 9 minutes, 9 minutes only. We'll keep the other broad sweeps, this ATR trail multiplier, let it reevaluate against the long only and short only, but everything's going to be at 9 minutes. Let's run that. My expectation is both is going to be our unambiguous positive thing to choose of the three. So here again, you can just kind of look at we're sorting, confirming our total net profits are all at the top. Our performance factor is for the most part top to bottom. And clearly hastily we can just see both all the way down. It's not until you come down a little bit. Here's our long, still some positive. It's not a bad result there. Short only, not even a bad result. So again, that's just another piece saying, hey, if you go long only or short only, both directions actually have good data. So both hands down is our default on this particular setting. So we're going to continue to fine tune 9-minute both directions. We've eliminated some unknowns as we optimize. So now we'll uncheck long only, uncheck short only. We've validated that both is what we're after to continue to fine tune this particular session for Monday during the day. So our next thing here is, again, remember when we have the break even in true, we're no longer utilizing risk reward. We're no longer utilizing the stop buffer. So let's continue to fine tune this. Notice this is very huge. Okay, notice that we've got 3. So we've got the upper limit is what's giving us this total profit. So we're not even within the correct range yet for optimizing. The runner wants more than 3 for the multiplier. So this is where we're going to have to go on up. We'll change this like to 4, move this up to like 2.6, a little bit less than 3, but let's bump that up to 4 and then leave our increment again at 0.2. So we're going to go ahead and check everything now between 2.6 and 4 on an increment of 0.2. Our worst scenario that should remain should be this identical row of 3096 with 382. Okay, so we're already improving our results just with some additional optimization. So again, now our 3096 is clear down here. Do we have clearly some better results? Well, we go up to 30 and 30, but a 32, a 31. So now we're starting to say, hey, we might be hitting the potential higher end of a peak up in this area, but our 3096 is no longer valid. We do have some numbers that beat this. So what's the main difference between these 3? You really can't tell without looking at it. However, let's take the 3274. It's got our highest performance. It's got our equally best drawdown with a percent profitable 30%. Okay, what's jumping out at me here is, again, 3148 versus 3274, but look at our drawdown is half. So this is where we kind of now need to kind of drill down and figure out, hey, wait a minute here. If I can cut my drawdown in half and I'm only giving up roughly a little over $100, now I've got something to look at here. So this is kind of where some of these I want to do some exploratory learning here, because this Kalmar ratio and expectancy, I kind of want to optimize against those now just to kind of see our output, what that's going to give us. So this is, okay, so our performance here now is basically a kind of a Kalmar, which so it considers that drawdown. It's weighted heavier. So you notice our higher, again, this Kalmar, optimize on Kalmar, is what populates under this performance column here. Remember, we still have our profit factor. That's native to the optimizer, but this is where the Kalmar data comes in. So that kind of helps me filter out some of the other things that, from a project perspective, hey, drawdown is really weighted heavy for me. So now I'm more interested in the 3148 than I am the 32, 30, 31. In other words, where do we have so we got like 3274, But when we start looking at some of these other more of an expectancy slash other priorities, which is drawdown, this is where that Kalmar ratio really can kind of come in and help filter out some of that noise. Is a 31.48 better than a 32.74? Well, if we just looking at it, hey, 810 is acceptable. I got more trades. I got a higher percent profitable. But really at the added benefit of only $120 more profit. So this 824 Calmer now is the leading candidate. So this tells me I do want to share how I come up with the Calmer ratio because it just proved to help filter out some noise that I think most people would have without being able to kind of look at it through a different lens. I'm going to go ahead and do my expectancy. This one is I'm fine tuning. But this kind of has some floor data built in. Expectancy, as in a nutshell, really is, hey, take all your winners and losers together, and but your expectancy per trade so for the most part, ratio or your average trade 81.85. So you're kind of looking at an expectancy of $81 essentially, but that's not really how the data comes out. So I've got zero here. That is very interesting to me. Um, so of the 1,000 trades I'm looking at, I've got something here that is getting filtered out by the expectancy. And I believe it's the percent profitable. Yes, my expectancy, this gate, it's a floor gated. So unless I'm over 50% profitable, it will actually filter out the trades. So very valuable information for me right here that I just get and why I have this. Where this would help us filter out some noise is really when we have the fixed take profit with the fixed stop loss. In the runner, hey, our expectancy with a gated floor of having at least a 50% profitable win rate, hey, we're giving up that 50% floor to have the runners. So optimize on expectancy when the when the exit method is break even. In other words, when we have a runner, forget about expectancy. You're going to have to give up that percent profit. You're going to take a lot more break even, a lot more small losses, but you're going to have your runners. So expectancy, no go whenever our we're set to true, keep going on, whenever our break even is true. So very valuable. I'm glad you guys forced me to do that. So, but Calmer is extremely valuable. That really does filter out some of that noise and kind of prioritizes a slightly smaller total net profit, but it draws our attention back to, hey, objective of Anna is really consistent profits over time. Drawdown is a big factor. I'm not giving up a very large number of trades. I'm not giving up that much of percent profitability. This is a runner. So our percent profitability we know is going to be down, but my runners do run. So Calmer is very good. So that's where we are. So we've locked in 9 minutes. Our time frame is good. All we're going to be doing now is we got 3.6. So that's very good. So we did not hit our max or our minimum, but now we're just going to fine tune to a 0.1, as much refinement as we can with the ATR trail multiplier. And that essentially, kind of becomes one of our last optimization. Again, we're looking at 4 to 8 here. So this is when I'll come up and now I'll tighten my look back. I want to keep 6 in the middle, so I'll do a 5 and like a 7, but I've got my finest sweep on my TP and stop loss with the break even true setting. So that'll be kind of one of our final sweeps to lock in what we're going to do here. Okay, very nice. Again, see our Calmer, our performance. Again, everything's pretty tight up here. 3152 is our high. And again, that's at a really what we're keying in on there is that 3.5 ATR multiplier at the very bottom. Notice that our NR7 look back is 6, 6, 6. So everything NR7 6 is definitely locked in. The optimal 3.5. So let's just do a 3.3 and a 3.7 to kind of just have one final. Let's look at the more optimal of that 4, but let's lock in 6 here in our narrow range. So our look back is locked in at 6. The only thing we're optimizing right now is we're fine tuning exactly what is our best ATR trail multiplier. Okay, so this is what I kind of like to look at. I got 3152 at 3.5, 3.7. Hey, it comes down just a little. 3.6, it's down just a little. 3.3, so now we're on the lower side, how it comes down just a little bit, and 3.4. So 3.5 is right at the peak. It slightly goes down below 3.5 and slightly goes down above 3.5. So that is your true optimum setting for that parameter. So when you can get that type of refined data, that's actually very positive. It's slightly without it, it's not on a cliff. So it doesn't go from 3,000 net profit down to 1,000 net profit just by, a few ticks worth, so it's just a slight degradation below 3.5, a slight degradation above 3.5. So that confirms that 3.5 is optimum for this setting. So we're locking in Monday's setting. We have a couple more things that we need to do. At this point right here is where I will hit template. I'm going to save. And now I don't want to have to go rebuild this again. So I'm going to call this day gold Monday optimized. Okay. So I need to go and manually put stuff into the back test side, but I don't want to lose the data that's saved in this file here. So I will always save my final optimized, and this is gold Monday, and it's just optimized. I'm going to save that. Okay. But before I click off of this, just a quick note of what I've got, and I'm just going to go into the backtest mode, put in these exact same numbers. We need to be able to duplicate 3152 and 382 drawdown. And then we have another test that we need to do to make sure everything's working good. So we got direction is both, 2 contracts, those are standard, but I am on the NR7. I am using stop mode and target mode, NR7 and risk reward. So I'll just write down NR7 risk reward just on a little scratch sheet of paper next to me. And then I've got Monday true. My times are default, but I will write because they can change, but they're not going to on this one here. But I've got basically 0420, and then I'm stopping at 1230 with a flattened by 1245. Need to write that down because that needs to be confirmed as consistent when we go in the back test. Now I've only got a couple things I need to note also. So NR7 is 6. It doesn't matter what risk reward is. It doesn't matter my stop buffer. It doesn't matter my stop loss look back. And it doesn't care what my profit target and ticks is. Because I have exit method use break even true, I'm just going to write down the 6 for the NR7. And then I'm going to write down true. And then with following that true, I've just got my defaults of 2, 14, but the very critical input is the 3.5. And I've got my 9 minutes. So I need to make sure I've got the right time frame when I input that. So 9 minute with those other settings. Commissions collected, standard order fill resolution. We are ready to run into backtest. So I'm just going to switch this over to backtest. And all we're going to do is make sure we got the exact same settings put back in. We've got Monday. Our times are correct, 12:30, 12:45. NR7 was 16. We don't care about risk reward. We don't care about the stop buffer. We don't care about the stop loss. We don't care about profit target ticks. All we care about is with this true, we got our defaults of 2, 14, and 3.5. We're still at gold. We're on 9 minutes, and our time frame carried over. Break it in a day true, include commission true, exit on session close true. We're going to hit run. 3152, 382. So we successfully went from optimized into back test. So now I'm going to come over here and I'm going to basically save day gold Monday, but it's no longer an optimized file. It is a true back test. So that is what I would load into the control center when I want to go live with this strategy. However, there's still a couple other things we need to look at. So we've got an optimization for Monday, but one of the things we have to do under historical field processing, we do need to come down and select high, and we need to make sure that type is tick. This is a way to utilize a secondary time frame, and we're saying tick to basically duplicate the fill processing to more imitate live market, because market live data comes in as a tick. So for the fill processing, this allows us to actually get as much close to live tick replay as we can. Keep in mind that it's still an open, high, low, close, but it's based on one tick. So it's not going to mirror live verbatim, but it is the best hack that we have to at least imitate our fill processing the best we can. So we need something as close to, and it still must be good, as 3152, 382 drawdown when we do the historical fill processing high tick value 1. Because if these numbers go south and they're no longer substantiated, then we actually have a bad configuration. So we need to validate at least our back test under the historical fill processing. This does take a little bit longer than order fill resolution standard, the fastest, but it's very reasonable. It's not 10 minutes like it used to be on some of those other strategies. Okay, this is what I really like to see. When we see under our historical field processing, we put in high with type tick and a value 1, and we meet, if not exceed, the numbers that we had under the standard fastest. That is a very positive sign that you've got a clean setup. Historically, Monday day session for gold, the past 90 days, this is what did happen. And will this continue in the future? That's to be determined. But this gives us the best edge that we can have for a Monday session utilizing NRG7, NR7 for MGC. So next thing I'll do is I want to just go back here to standard. And I'm going to save that one more time. And I'm going to again make sure I've got day, it's gold, it's Monday. I almost clicked on the OPT, but it's the back test. I'm just rewriting the same file, but again, I'm saving that because that is the default settings that'll come up when I load it to the chart. So once I load that, again, just one more hasty test. I'm going to load, go back, select the one that I think I just wrote to. I'm going to load it one more time, and then I'm going to hit run. I should get there it is. So our high tick actually comes out a little bit better than the fastest, which is always a plus. But now I've saved Monday. So if it was Sunday night, I'm getting ready to go to bed, all I've got to do under my control center right here, bottom, strategies tab, I'm right clicking, new strategy. I'm going to hit NR7. I'm going to come down here to template. I'm going to load. Again, that one that we just finished, gold, Monday, back tested. I'm loading that. I have no other changes that I need to make. I'll leave that all in there. The only thing I need to do is set the account that I actually want to trade on, and then hit OK. And then make sure it's enabled. Go to bed. You're done. So the only thing when you load the strategy is you load your save template, but make sure you select the correct account. That's the only thing. And that is a start to finish how to use current NR7 for different models to execute trades all within one strategy. All four are based on a breakout, but two of the four allows us to utilize runners, so take a lot more losses, very small losses, but the upside potential is much greater. So that works great on trending days. Other two configurations, one is just, hey, you want a fixed risk to reward. You're going to still have more losses because your stop loss may not actually really align with a valid pivot point based on the natural current market behavior. But the pivot look back, or the other configuration, kind of takes advantage of the natural pivot points based on it looking back 6, 7, 8 candles. That identifies a pivot point, and that becomes your initial stop. Early to say this full confidence, but via beta testing observation, what we optimized here is 9 minute. 9 minute is, to me, very comfortable. From a stop loss perspective, the fixed risk reward, if I've got like that 21-minute candle that we were looking at earlier, I would be more inclined to utilize that fixed stop loss, risk NR7 range with the risk reward, because then I have consistency in my risk. Where when I have the stop look back feature turned on with 21-minute candles, what you're going to find is, yeah, over time, it may be a winner, but it's hard to stomach those extremely large stop losses relative to the reward. In other words, you might have, 60 points of risk for a 20-point reward. You will see that on those larger candles, because by the time we actually get entered into the trade, the breakout is halfway done. Those are some nuances to kind of grasp and understanding the difference between the narrow 7 range, utilizing risk reward versus the stop look back and fixed TP. Candle size can be very important. Direction can be very important. But recent data to me is I try to filter out those um, settings that are very biased to short only or long only. Not saying that rule them out completely, but I highly favor NR7 when she can trade in both directions. I highly favor NR7 when I'm that 5 to 10 minute time frame. I'll consider the larger time frames, but then I'm going to probably focus a little bit more of my energy on the risk reward, fixed stop loss relative to the fixed reward. So watch this video. I can get the beta version sent out, and I will, on specific request from anybody who watches this video. I'm not going to just post it automatically with this video, but happy to send it out as a beta version to those who watch this video and are interested in the latest version. And again, after watching the video, do not hesitate to drop some questions in the group, and I'll be happy to answer any questions that we have based on this video. Thank you.